Hello and welcome to Demand Better. Right now we're going to be talking about what is a realistic tax and spending plan. So the federal NDP is promising $214 billion in new spending over the next 5 years, which sounds like an absolute ton until you sort of think about all the different things that we're getting for it. We're getting 500,000 units of affordable housing, we're getting pharmacare for everyone, we're getting childcare for everyone, we're getting renewable energy, we're getting retrofitting housing, we're getting new infrastructure, we're getting better public transit. There are so many different things that are being invested in and growing our economy that $214 billion actually makes a lot of sense once you put it into context. The next thing is $166 billion in revenue. Now, this is the thing that a lot of people have been skeptical about because they think that the rich can really easily shift their money out of the country and that they can just avoid new taxes super easily. And while this is sometimes the case, the NDP's plan is specifically the type of plan that would offset this and that would be able to raise a lot more money than even the PBO, who calculated all these numbers, the Parliamentary Budget Office. Even their numbers are way off in terms of how much money is going to be raised by these ideas. So let's take a quick look at this article right here. So this is by Alex Hemingway. It's policynote.ca/tax the rich. Basically, Alex Hemingway has done an exceptionally good job of breaking down why a lot of these ideas about, you can't tax the rich because of the repercussions. A lot of that is bluffing. A lot of that is fear-mongering, and a lot of it's coming from capitalist media that is privately owned, funded largely by corporate advertising. So it's understandable that when corporate taxes and when taxes on the wealthy suddenly come up, the media is less likely to talk about that like it's realistic, when in fact it's extremely realistic. So one of the things that the PBO included in all of their assessments, so included in that $166 billion, is the assumption that 35% of that money was lost, meaning it's $166 billion after 35% of the value has been lost by behavioral responses such as tax avoidance and evasion. So the types of things that people are worried about, the max assumption that the PBO has is that they will lose out on 35%, meaning you're still getting 65% of every tax dollar. That's still worth putting the tax dollars on the rich instead of on everybody else. But is 35% a reasonable amount? Turns out it's not. Right here it says, levels of tax avoidance and evasion are not laws of nature. No. In fact, many of these systems have giant gaping loopholes left in place by the Liberal and Conservative parties so that their specific donors and allies can get out of taxes. The NDP is planning to close most of the loopholes and most of the ways that rich people classify their wealth and classify their assets in ways to avoid taxes. So the NDP is planning to basically make it a lot harder to avoid your taxes at the same time that they're increasing taxes on the rich. Oh, it's crazy. Why would you do them at the same time? It's almost like we need a party that isn't beholden to the rich like LibCon's. Surveying academic studies of European wealth taxes, University of California, Berkeley economists Emmanuel Saez and Gabriel Zuckman estimate a substantially lower average behavioral response of 16%. Furthermore, they suggest that this figure should be understood as an upper bound. Now, I wasn't 100% sure what they meant by this, so I actually looked into the article underneath all of that. And this article right here, Behavioral Responses to a Wealth Tax by the UK Wealth Tax Commission. Basically, what they do is they go through a whole ton of other academic articles. This is just one table that includes a bunch of the data, and they basically look at all of the different behavioral responses to the wealth tax. And when they do all of their calculating, it ends up being around 7 to 17%, with 17% being an extreme response that the wealthy might take. So, right now, our independent, super empirical body, the PBO, not basing their 35% number on reality, because the upper bounds of the real number is literally half of 35. It's like they took the real maximum number and then multiplied it by 2, and that's how much money they're assuming is going to be lost to tax evasion. So, the PBO is greatly overestimating the level of tax evasion that we're actually going to face. And because the NDP plans to close a whole bunch of loopholes at the same time, the 35% was a pretty unrealistic response even within the PBO's own report. They should have been able to calculate the fact that we would have a much lower tax evasion rate than the other parties. We just simply wouldn't allow it to the same extent as the LibCons. Much of the uncertainty, this is something that I heard a lot. Oh, it's uncertain that they'll raise $166 billion. No. It's actually likely they'll raise more than that, because 17% is roughly the maximum expected response that the rich are likely to take. That would be, and if they took that response, let's understand, why would their response be so weak, right? You might wonder that, don't the rich like to throw their weight around? And it's absolutely true that they do. But the reason why is because there's a whole bunch of costs associated with taking your money and moving it out of the country. Whether that money was in the form of financial assets, or in the case of a lot of Canadians, housing assets that are extremely difficult to just sell and move, especially if a bunch of rich people are doing it at the same time. So I decided to actually just find the graph that displays what the distribution of Canadian super wealth is for the very rich, and it proves essentially exactly what I was saying. Of the $11.7 trillion in net worth that Canadian rich people have, almost half of it is in the form of real estate. And that is a huge deal, because real estate is one of those things that has been driven up to a ludicrous degree. We're in the middle of a housing crisis and a real estate crisis, partially because these guys have been bidding up the prices. Literally, a wealth tax encourages them to stop jumping up the prices of everything so high, because that valuation will ultimately end up hurting them in the long run. So they'll stop creating all these bubbles intentionally just for the purpose of having super valuated assets. If we look over here a little bit closer, life insurance and pensions is the next largest chunk. And life insurance and pensions are basically yes, you can take them out of the country, in the sense that you can move, and then if you die, or if you continue to live there until your pension gets paid out, I'm pretty sure you can continue to receive that money out of the country. But it's not something that you can just yank out of the country. So it isn't something that can be used as a threat in the same way. Mutual funds, listed and unlisted shares. Now, these are definitely something that we have to be a bit more careful around, because these can, for the most part, be sold off, and that money can be taken and just yanked right out of the country. And if that happens, not only do the value of all these companies and their shares go down, but the money leaving the country will devalue our currency. And so that is something that we have to watch out for. However, it looks like it's around a third of the overall amount is in the form of mutual funds, listed and unlisted shares, and currency and deposits. And currency and deposits are the ones that that's the easiest thing for the rich to flee with. They can basically take that and exchange it for other money or put it in a tax haven. And in fact, there's probably more money than this because this isn't taking into account the amount of Canadian wealth that's in tax havens. Let's keep in mind, the Pandora Papers that was just revealed actually doesn't show any Canadian billionaires. But essentially, with each new of these leaks that comes out, we discover the actual wealth of a whole bunch of rich people. As long as we can eventually hit the one that gets the Canadians, oh boy, we can fine them out the wazoo for evading taxes and falsely declaring their income for all these decades. Because we wouldn't let any other citizen get away with that. Why do the rich allow to have their whole own system where they just have to pay back the taxes that they literally stole from you and me? Like, they get to get off scot-free by just paying back what they already owed. No, they should be paying at least double the interest rate. They should be paying fines. We should be making it actually something that the rich are afraid to do, rather than something that it's stupid not to do because all the other rich people that you're competing with are doing it. We're literally making it so that the rich people who properly tell us what their assets are, what they actually earn, they're being punished within our system because all of their competitors are allowed to falsely declare less income. So we're encouraging that type of tax evasion behavior. This whole cracking down on tax evasion, that's going to crack down on everybody's tax evasion, including the companies that didn't necessarily even want to do it, but have to do it to compete. Ultimately, in Canada, the reason why our media fearmongers so much about the ability for the rich to flee with all their money is actually because they're actually bluffing. They're literally telling us what they don't want us to do by telling us that we can't tax them. They're actually telling us that we should tax them.